Welcome G3 investors. This is Greg Gallagher, and we're going to take a look at the market for the week ended and the month year-to-date ended February 22nd, 2019. I've been out sick, haven't done a couple YouTube videos for the last couple weeks, so we'll just look at things on a year-to-date basis. Visit our website, www.g3investors.com, here by clicking here, click here, or email me at greg@g3investors if you have any questions or anything like that. Sign up now. This is what we've done so far this year. The S&P 500 is up 11.4%. We are up 9.5%. The markets just went straight up. And when it goes straight up, trend following system always lags. You can see last year we absolutely crushed the market, beating it by 51%. And we beat it in 2017, which was our initial year. Here's what you get for subscribing. It only costs $200 annually, and you get all these cool things. Mostly, though, you get the setup schedule and the weekly reports each week. Okay, let's take a look at the market. What has happened? Okay, last year, we're looking at the NASDAQ Composite Index here. The blue line is the 50-day moving average. The red line, the red solid line, is the 200-day moving average. The dotted purple line is the 50% retracement of this move. The NASDAQ peaked at a high of 81.33 on August 30th, 2018, and it bottomed down here, and that was on December 24th, 2019. That, folks, was a 23.9% correction. Okay, that difference is 1,943 points between the peak to the bottom here. And what a market does, and this is totally normal, we call this a retracement. This move that we've had starting here on the 26th of December has went up, and as of the 22nd, okay, it had retraced 68.9%. And more importantly, the market is now, the NASDAQ, which involves 3,400 stocks, is trading above the 50-day, the fast moving average here. It's trading above the 200 or the 50% retracement, which is resistance, and then the 200-day. So we were back into what I consider bull market territory. Okay, this is a V-shaped recovery, because as we went down here, we'll come right back up. But, you know, there's nothing to stop the market from going all the way up to 8,100 or higher. Okay, now it's unusual that it would go up without having any significant corrections. So I don't want to say that this is normal, but there's no such thing as normal in the market. And it's my point that nobody knows what the market's going to do. You know, the market today, this is Monday morning. Okay, I'm doing this report even though this is Monday morning. Let's see, it's probably 10 or 11 o'clock here. It's 11 o'clock, okay, on Monday morning, the 25th of February. And if you'd asked me Sunday night, what would the market have done? I wouldn't have known the Dow would be up 192 points and the NASDAQ would be up 91. But that's not important. What is important is what happens. What do we do about it? Okay, well, we got in the market when it went up above 1, 2, 3, and we basically went up, got out, and so on and so forth. Now, we did this for all the different ETFs that we've invested in, and right now the model is 77% invested. We have 20 open positions, but, you know, and we'll follow the market. And it's going up today, and we've made more money today. You know, we're up, you know, quite a bit today. But the important thing is trend following follows the market. So when the market does correct, so if the market would suddenly turn and go back down here towards this bottom, which would be entirely normal, okay, that's called an ABC type move where you're testing this bottom. That's a Y coffee and retest of the bottom here. That would be totally normal for the market to do that sometime this year. Who knows? It might not. It might not do it. I don't know. But that's the important thing. But let's just take another moment and look at the S&P 500 because it's a little stronger than the NASDAQ. The SPX, okay, but it's the same pattern. Again, the NASDAQ peaked, since the NASDAQ is the leader, okay, I'm sorry, the S&P 500 peaked after the NASDAQ. So it peaked on September 21st here, where this blue dotted line is. And it went down and it bottomed out on the 26th, 2 days later than the NASDAQ. Okay, and this difference between this peak to this bottom, okay, is 594 points. So there's the 50% retracement. There's the line. Also, I want to point out that this blue line, the faster moving average, crossed the red line, which is the 200-day. And this is called a black cross. That is considered technical damage to the market. I don't really care. I mean, I care about it, but generally the market will go much higher if this blue line gets back above the red line. But we're not going to wait on some line to cross. We get in when we feel the market is trending upward because we want to take advantage of this V-shaped recovery here. But it's the same general move. Okay, so let's take a look at the Russell, because the Russell's been a little slower. It's been lagging the other two, even though it had the Russell had a bigger correction. I think it was 27%, whereas the NASDAQ was 24% almost, and the S&P 500, I forgot to say that, was 20% correction. Here's the Russell. The Russell peaked 1 day after the NASDAQ. So again, it's trailing the NASDAQ. The NASDAQ is 3,400 stocks. The Russell is 2,000. The Russell index is 2,000 small stocks, small cap stock, capitalization stocks. So the big companies like Apple and Amazon and all those, Google, they're not in the Russell 2000. Okay, but still, it had a much greater correction here, 27% correction, and it bottomed out here on the 24th, which was the same day as the NASDAQ. That difference is 475 points. And again, the blue line crossed over under the red line. That's a black cross. And then there's the 50% retracement. And what has it done? Well, look, it just finally retook its 200-day moving average on Friday, the 22nd. And of course, it's up again today. And that's all good news. So to kind of get a feel for how we do this, and there's all kinds of, the market, we're in a bull. We had a 20% correction in the S&P, 23% in the NASDAQ, and 27 plus percent in the Russell. To me, that's almost a bear market, or it is a bear market correction. So we were in a bear market when we were down here. Well, now we're coming back up from that level, and so what do we do? Well, let's take a look at the model a minute. So what have we done? Well, we've got realized gains of 18,000. Okay, as of February 22nd. As I said, we're up over 8,600 here today. So we've made more money today, and we're lagging the buy and hold guy, and we're lagging the S&P and the NASDAQ, and that's normal because the markets just went straight up off the bottom. Trend following, you don't get in at the bottom because nobody knows where the bottom is. But we're doing really good. We've got almost the majority of the move in the S&P 500. That's what we really track. And last year we crushed it. We crushed everybody, as you can see here. There you can see we have 76.9% our current investment, and our winning percentage this year it's getting close to, we're at 59.3%. About 600%, about 60% is where I normally am at, and we started out the year, we were a little off that. We're starting to get closer. So as the year goes on, I expect us to get above that percentage. Really, my goal is to be at 75%, but that's a big secret. Don't tell anybody. So here's the open positions we have. Here's the completed trades. We had 91 trades completed, even though I reduced the ETF count from 40 to 28 this year because I'm trying not to trade as often. But this market is squirrely. I mean, it goes up and down a lot. But right here is our open positions. We have 20 open positions, totaling 280,000 on our portfolio. And you know, if we go back to the market here a minute, and we look at here's one that's up 4.8%. What we got here? This is housing is up strong. There's mid cap growth 400. That's really strong. And some of these others we've traded out and traded back in. But let's look at IJK and XHB. So those are two strong ones. So let's go back to this, and we can see that I do the same thing for IJK. I think that's the mid cap. Yeah, that's the iShares mid cap 400 growth. Same thing. Okay, here I didn't. The peak was back here on the 14th, but here's when it crossed the 50-day, and we actually shorted the market from here. But here we got back in, and it's basically went straight up, and so we've made a pretty good gain out of that, and it's the same pattern. It crossed over here and went back up, same exact pattern. Now housing XHB, same sort of thing. We got stopped out here, so we got back in at this point, and then it's went right back up. But the pattern is the same. This is when we shorted it, when the market went down, peaked out here, bottomed out here, went up, we got in, we got out, we got back in here, and now there's our gain for the year. So it's just that simple. The only other thing we could look at here is, let's take a look at, this is the heat map. So year to date, I always like to say, what is driving the market? So on a year to date basis, and this is the S&P 500, and so it's up 11.4%. Okay, well, what's driving it? Well, the same thing that's driving it last year, the FANG man, Facebook, Amazon, Netflix up 35%, Google up 7%, Microsoft, Apple, and I picked NVIDIA, which is a semiconductor. I mean, I could have picked any of them, but that equals out to FANG man stocks, and those basically have driven the market this year. Although we've got good moves in the major integrated oil and gas companies and the independents, oil and gas equipment services. There's Boeing, aerospace and defense, IBB. That's one we've made some good money on this year. And then the banks have done pretty good. And of course, credit services, Visa, MasterCard are doing real good. And we're taking advantage of all those ETFs. So, you know, going back to how we're doing great. The market, we're trailing Bob, and he's been crowing his buy and hold model, but we crushed Bob last year, and I'm not worried about Bob. As soon as the market turns, he'll be crying in his soup. Here's some of the technicals that I look at. The bull market has resumed. When these numbers go positive here, and I put them in green, that means it's a positive market. And we even got the 200-day approaching 50% here. Where it's almost 50% of the stocks out there are above their 200-day moving average. That's a good thing. So we're looking for the market to go higher because that's what it's trending and doing right now. Here's the corrections that I was talking about. The NASDAQ corrected 24%, the S&P 20, and the Russell 27. Of course, we looked at all those, and you can watch TV. And here's how the Facebook, the FANG, Facebook is just FANGMAN, FANG man stocks. There's how they performed. This is compared to the last month, and this is year to date. So you can see they're up 16% compared to last year. So we've had a 48% improvement and it's a big move. Anyway, that's great. That's G3 Investors. This is Greg Gallagher, and I'm wishing you the best success in trading. So good trading and good luck.